We are still moving on with the fundamentals and technical analysis on the euro pairs. The reason as to why we are doing this is a guide. If we look at the euro, the previous episodes, we looked at the euro dollar, we looked at the euro Swiss and the euro Canadian dollar. Then we are only left with the pound, the euro pound and the euro Japanese yen. Let's go to the chart. We are starting with the euro pound. We are doing the analysis. So when you look at the euro pound here, we have a sell side and a buy side liquidity. Most people will call this a sell side liquidity and buy side here. But if I have a high, I will call it a sell side because it is bears that push price lower. It is not bulls. So to me, this is a sell side liquidity. They sold here. They have stop losses on this week and stop losses on this week. So in here, we are consolidating. It's not a long-term high or low because this has not been long enough. It's just the New York close. This is a 1300 hours, the New York time, or 1 p.m. the New York time. So let's come back here. We're going to do this analysis both on 15 minutes, 5 minutes, and a 1 minute time frames. So when we look at this area here, we are bearish. Just like we all know, if the euro has the news that is going to affect the market, if it is bearish, well, smart money has to do whatever it takes to play retail traders. When you look at this level here, this is a retail double bottom. This is a retail double bottom. If you didn't watch those episodes, please go back and learn retail concepts. Do not use them to trade, but just learn them. You need to know that they exist. So this is a retail double bottom. This is a retail neckline. Once a retail trader has a double bottom, they are expecting a retracement. Sorry, they are expecting a reversal. Reversal where if they buy here, they expect price to do what? To trade above sell side liquidity. But we already know that we have fundamentals. We have the news that will affect the euro. We have the news coming to sell. That is the manipulation before we go long. So at this time, we have the highest point of interest, whereby people, most traders, retail traders will look at this as a demand zone. Okay, there are so many concepts that retail traders have. They will look at this as a demand zone and they will have their stop losses here. If they sell, they'll be like, okay, I'll put my stop loss here. So stop losses here are taken, but that is not very important at the moment. To me, this is what I'm looking at. I am looking at price buying. This is a 15 minutes chart. Do you see this institutional level here? We have an institutional level. After midnight, price does what? Price rallies above this level, above the institutional level. Then after that, it takes this high, then drops. Okay? Remember, the concepts say we want to see price trade below the institutional level. Our entries on the institutional levels. So if price comes here, consolidates around, comes to take these people out, then it drops. You are not chasing price. Let's go to 15 minutes time frame. This is a 15 minutes time frame. Price trades, you know, this sell side liquidity. Right here we have relative, we have equal highs here on a 15 minutes time frame, on a lower time frame. Remember the other retail double bottom that we had on a 15-minute chart right here. This is a retail order block. People trading order blocks, they will take this one as an order block. Reason being, this is the last candle before breaking structure here. So once price comes back to this candle, they are going to buy. We don't want to trade against the trend. We don't want to go against the trend. This is sell side liquidity. Up here, we have a lot of money. If you come back to a 15-minute time frame, it's just a candle wick. But once you go down to lower time frames, you're going to get all the details. So relative equal highs here, sell side liquidity. We have an institutional level here, the 20 level. The concepts say we are not selling above an institutional level. We are going to wait for price to trade below the institutional level. As soon as price comes back to the institutional level, we are selling, we are entering the market. That is the concept here. Are we looking for a smart trading entry and a half here? We are only looking for smart trading entries below 80 and 50 levels. We're not looking for smart trading entries below the 20 and the 0 level. That is how the concept goes. That is how my concepts will work for you. We are not selling above the 80 level. We are not selling above the 20 level. We are not selling above the 20 level. We are selling when price closes or trades below an institutional level, then comes back. That's when we are entering the market. This is a 15 minutes time frame. Sorry, this is a 5 minutes time frame. We see that price had to come and trade above these highs here. Okay, you see these highs, relative equal highs. Price had to come for this high as well. That is the line that I put here. Do we have an institutional level here? Do we have a smart trading entry? Yes, we have a 20 level. 1 hour ahead of the market. Oh, sorry, 1 hour ahead of the news. At what time do we have the news release? We have the news release at exactly 3:30 o'clock in the morning. If you sell here, you will still not follow what I teach you. You will be doing your own stuff. Reason being, anything can happen in the Forex market. Anything can happen. You're not going to sell up here. You're only going to sell when price breaks or trades through the institutional level. Between what time? If we have high volatility news expected on the euro at 3:30 o'clock in the morning or at 3:30 a.m., the New York time, you want to see yourself trade between 3:30 and 2:30 a.m., the New York time. What time is this? This is 2:25, 2:30, this candle, this black candle. You're not going to sell here. You are not going to sell here. You're going to wait for price to trade below the institutional level, which is the 20 level. Price comes, trades to this level, sells. This is a good indicator. Don't mind. Don't mind. As soon as price trades below this, it comes back to the 20 level right here. This is your entry at exactly 3 o'clock in the morning. Yeah, I know I'm telling you to enter the market 1 hour ahead, but if you plan your trade and trade your plan, you don't want to see yourself being kicked out of the markets. Well, if you want, you can sell here as soon as price comes here, but this will scare you. This will scare the hell out of you. Once you see price trading against you, you're going to get a margin call. That's why I highly recommend you waiting for price to trade deeper below the institutional level. Believe me, price will always come back to the institutional level. Price will always come back. Price will always look for you. Wait for it to go. Wait for it to trade. Let retailers chase price. Let gamblers do what? Sell and sell and sell and sell. Then once they go against them, they are kicking them out of the market. You are selling here, the 20 level. Let's go to a 1 minute time frame. So this is a 1 minute time frame. This is a 1 minute time frame, and this is the 20 level right here. You're going to use higher time frames for analysis, then lower time frames for entry. So this is the other candle that sold. Okay, it sold. Then after selling, it gave us an imbalance here. In this level, remember I told you we normally have institutional candles. Do you see an institutional candle on a 1 minute time frame? Here, you have 3 entries, 3 smart money concepts to enter the market. You have you have an institutional candle right here. Secondly, you have an imbalance below an institutional level. The third, you have an institutional candle itself. An institutional level, the 20 level. Here, if you want, you will wait for price to come to this level and you sell. Okay, you can sell when price comes back to this candle. You can either sell when price comes back to the institutional level or when it comes back to the area of imbalance, this candle. But the best option will be you selling as soon as price comes to the 20 level. You're selling here. What time? You're selling at 3 o'clock in the morning. 30 minutes to the news release. The euro, we are expecting high volatility on the euro. It gives you an opportunity here to enter the market like a smart trader, like a professional trader. You sell there, price drops, consolidates at exactly a quarter past 3 o'clock in the morning. They didn't even come to your entry, not even close. Consolidates, then drops. Okay, it's a 1 minute time frame. After dropping, it is giving these folks another opportunity. Remember, I told you that if I'm to use areas of imbalance, I am only looking for a 1 minute imbalance. I am not looking for a 15-minute imbalance because they don't work for me. If price comes back, trades above this week, right here, I will still sell. I will still enter the market. I will sell here. Price comes back above this week, it drops, you're excited, comes again against you. Retailers are looking at this as, okay, an order block, institutional candle. Okay, they're looking at this as an order block, not an institutional candle, because retailers don't know about institutional candles. Comes to fill the gap here. Then at exactly 3 o'clock in the morning, it sells. Okay, you see this drop, drops, comes back again at 4:30, then keeps dropping. Then let's look at the very last currency pair, because I don't want to have long videos. This one is already taking something like 13 minutes. Let's come to the euro pound. We are starting with a 15 minutes time frame. We are starting with a 15 minutes time frame. Why am I doing the euro pound, not the euro NZD? It is because we are looking at the basket of 6 currencies. Every time one of these currencies has high volatility news expected, we are going to analyze the market using smart money concepts and the other concepts that I gave you. So let's come back here. This is midnight. This is midnight. We have relative equal highs here. We have relative equal highs here. On a 15-minute time frame, you're doing your analysis like a professional trader. Just like a professional trader. Now, this is one thing I want you to look at here. Do you see these equal highs, relative equal highs? Let's get their price level. This is where a smart trading entry will help you. This is where a smart trading entry will work for you. In the previous videos, we said if we have relative equal highs above a smart trading entry, we are going to use a smart trading entry and a half for entries. But since on this setup, the smart trading entry is above the relative equal highs, we are going to use the smart trading entry to execute our trades. We are going to sell there because once price comes back to the smart trading entry above these relative equal highs, we are entering the market. Folks, believe me, I know what I'm talking about. Let's not look at these equal highs here. Let's focus on this area. This area right here. This is a price level. It's a 40.64. If we have relative equal highs below a smart trading entry, we are going to trust the smart trading entry to push price lower. Retailers are seeing higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. They are getting excited. They get this as a break of market structure. They are buying. Okay, once price comes back down, they want to buy. Let me tell you where the confusion comes. The confusion comes in when you don't know what you're doing. And that's why I've decided to have these videos recorded and published on YouTube. Relative equal highs. Below a smart trading entry. Time and price. After midnight, I am sure, simply because the euro is selling, they would want to come for this money here. Liquidity up here. There are stop losses here. Price trades above this high. Which price level are we looking at? We are looking at a smart trading entry, the 70 level. What time? 3 o'clock in the morning. At exactly 3 o'clock in the morning, the New York time, price comes to the smart trading entry, the 70 level. Here. Are you selling there? Yes, you're selling there. Why? We ran above equal highs. We came to the smart trading entry. It's time to do what? To execute trades, to sell. If you're doing your analysis on a 15 minutes time frame, let's come back to a 5 minutes time frame. Now on a 5 minute time frame, this is what I have. We have the highest point of interest, which are the relative equal highs on a 15 minutes time frame. On a 15 minutes time frame, this is a relative equal highs bar. Now I'm going to call this my highest point of interest. The price level is still the same below a smart trading entry. After midnight, price is hunting for liquidity above these highs before it sells. Let's look at the 50. We have the 50 level here. Most people think that, oh, the 50 level will stop price. No, the 50 level will not stop price. If you sell at the 50 level here, when price comes back here, you cannot risk 30 pips. For God's sake, you cannot risk, okay, those are 20 pips. You cannot, that is too much. Because remember, there are people like some of my friends that I won't mention in this video that trade at $10 per pip. And once you're trading at $10 per pip, you sell here risking 19 pips. That is a lot of money that you're risking. Price trades above these highs, comes to the smart trading entry. At what time? At 3 o'clock. There. You click a sell button. Whichever lot size you want to use, I don't care. But as long as you're using my concepts correctly, not violating them, not selling at a 50 level. Oh, no, all these videos are all about relative equal highs below institutional levels and smart trading entries or above. That is what these 3 videos are all about. Not only are they going to be 3, it's going to be a series of so many videos with the same concepts, because we've been looking at 50 level, 50 this, 50 that. No. Okay, we need to be serious with whatever we're doing. So let's jump to a 1 minute time frame. If you missed this, we look around this area, what you would have used to enter the market. So let's look at the charts. Let's look at the charts. 22nd. Just need to scroll back. Okay. We have a smart trading entry here. Then below a smart trading entry, we have our relative equal lows. This is analysis that I did some time back. It's okay. So we have a smart trading entry, 70 level. Price hits that level at what time? At 3 o'clock in the morning, the New York time. Now, let me say, for example, you don't trust that, but again, you're sure, 85% sure that the euro will sell. Believe me, I will always encourage you to use lower time frames for your entries if you want to use the areas of imbalance. Price comes back where? You see this imbalance from this candles week to this one. I will sell here. I will sell here. What time? Well, still 3 o'clock in the morning. Price trade score a little bit higher, which is okay on a 1 minute time frame. If I didn't enter here, this is my second chance to enter the market. Execute your trades here. 20 minutes to the news release. Then it starts dropping low and low and low. Then it gives you another chance. It gives you a second chance. Trades below the 20 level, the institutional level, trades below institutional level, comes back to that level again. You who is trading smart money concepts, you who is trading with the big boys or the big banks, right here, they're giving you an opportunity to go short. If you missed this, then I don't know what to do for you. So let's not have a lot of things here. Remember, if I come back to this setup on a 15 minutes time frame, we are selling on the smart trading entry simply because the smart trading entry is above the relative equal highs. The smart trading entry that rather is above the relative equal highs. Very simple. Watch and rewatch. Watch and rewatch these videos to be profitable. You need to practice.